China strikes back. That's the situation going on right now in the trade war between the United States and China. This has now gone on several iterations and several rounds, and now China is striking back. Meanwhile, President Trump doesn't seem to be too concerned about it. In fact, he says it's a beautiful thing.
We think we're in very good shape. We think we're doing very well. Again, there'll be a transition cost and transition problems, but in the end, it's going to be a beautiful thing.
Yeah, he's talking about transition cost. That's a code word for financial pain up front for the United States, and then the claim anyway that there's going to be a financial windfall down the road, and because of the upfront pain, there's going to be later term gain. Now that's a good concept in theory, and one that I'm a big advocate of. If you have a situation here where sometimes, hey, you got to pay a little price up front in order to get a long-term payoff and something that's sustainable, that's actually wisdom. That's a good thing, as long as you have a control enough over the situation to where it's a reasonable projection that what you benefit later is going to be materialized. But if you end up paying something up front and you don't have a good plan, then you may pay even more later. And so instead of pain and then gain, you may have pain and then, well, more pain. And that's not good for the United States at all. And I want to look today at a little bit at how this whole situation evolved, how it developed, what others in the both the United States and Western Europe especially are saying about this, and then where this could go, especially with China, because most of the other tariffs have either been greatly reduced or just outright put on pause. And so those things seem to be kind of off the table here a little bit, but you kind of have a big one with America's third largest trading partner in China. Because that has a lot to do with especially the working class in the United States. It's going to affect them more than any other class, because they're the ones that benefit the most from the trade with China in both directions, both some of the small business that we have that do business with China, and especially on the consumer level, what we get from China at lower prices. Obviously, that's now, as it stands today, going to be now higher prices because of the tariffs on both sides of the equation here. But let's look first of all. This started a little over a week ago for what Trump said was Liberation Day, and he'd been talking in the weeks and months before that about he loves tariff; it's his favorite word, and he says, we've been getting ripped off by people all the time, and everybody's taking advantage of us, and we're going to put tariffs on to bring that back into alignment. Now, like so many things that Trump does and says, there's certainly an element of truth in that. It's accurate. We do have a lot of trade imbalances that are unnecessary and that could be fixed with better policies. But we have to always be careful that we don't go so far in the medicine that we end up with a worse condition than the one we're trying to solve here. And listen, this is an issue with the trade imbalance with China that's been vexing administrations for decades. And everybody says they don't like it. Everybody says they want to fix it. But the things that are tried have not succeeded. And there's a couple of structural reasons why with that. A lot of it is because American businesses chose to offshore a lot of our manufacturing to China. It's less costly to do so there. A lot of small businesses in America, they can't do manufacturing. They don't have enough money or capital to make a factory of any sort, so they have to outsource it to China, where they have a lot more of that can go on, and some of these big firms can then basically outsource their manufacturing to them, and they'll do it on site, which they couldn't do here. So that benefits the small business, and then of course with the product coming back, that benefits the United States as well. And because of that fact, because the labor costs in China are less than they are in the United States, then it's more attractive to do that. So more companies have certainly done that and taken advantage of those opportunities. China has taken advantage of it because they know that they have a comparative advantage in the inputs to a business, so that they have been doing that too. So they have an upside in that. Then there's lots of other issues that go into that, and I won't get into a whole economic situation here, but the bottom line is that there has been a trade imbalance. It has gone on a while. It's not necessarily a horrible thing, because we do benefit from it, from the trade with China in both directions, in different aspects. There are things that could be corrected, but we have to be clear that overcompensating and overcorrecting could actually harm the relationship and harm the balance, both from the small business and consumer levels that has been relatively good for American consumers at any rate, and the businesses. But so on Liberation Day, he said, all right, after talking about it for a while, then all of a sudden he really dropped a bombshell that caught nearly everybody by surprise. And 185 countries were hit with tariffs, anywhere from 10% all the way up to, I think, 49% was the highest one on any different country. And, all these charts went up, and you remember Trump had that big board and he was talking about it. There's obviously one of the bigger one that's got a lot of the raised eyebrows and snickers behind the scenes were I think it was called the it wasn't a Davis, the McDonald Islands, which are uninhabited, and they got a 10% tariff of nothing but penguins. So that indicated that maybe the administration didn't do such a great job of actually finding out who was on the list, and did those numbers actually make any sense? Kind of an indication that probably they didn't. And in fact, the whole issue was it was going to be reciprocal tariffs. Trump went to great lengths. Many of his senior officials went to great lengths to say this is going to be reciprocal tariffs. So all these tariffs that people around the world have been putting on us, we're going to mirror those and put them back on. But when those charts came out, it didn't take long for the experts to start doing some analysis and think, wait, this has literally nothing to do with tariff rates. This has everything to do with balance of trade between the two sides. And he just took a simple calculation. We export this much, they export that much, and the balance was X or Y or whatever it was. And then we just divided between the two, and then this tariff rate was the difference between them. Anybody that we had a trade imbalance with, that delta there, the difference between, was the new tariff rate, which was ostensibly to say that'll bring it back into equilibrium. Problem is, it was about 80 countries that were upside down with the United States. They didn't have a trade imbalance. They weren't on the upper side of us, and we were on the lower side. It was the other way around, where we actually had the trade benefit. We sent more to them than they sent to us. Yet they still got a 10% tariff rate. So it was clear that it was not a reciprocal tariff, despite what was claimed. It was unclear at that point. Well, if it's not a reciprocal tariff, what's the purpose of it? Then that you get into what the claims were. The claims were a couple of different ones. Number one, that Trump himself said, up until I think the year was 1913, we didn't even have a personal income tax. We made all our money by tariffs. And then we went off of that, and he claims, and then it came into the Great Depression, and then we tried to rebound the situation once the Great Depression started, and that just exacerbated I think it's called the Smoot-Hawley tax tariffs. Those were disastrous, and that ended up exacerbating the whole issue. But the point that Trump was trying to make was that, we used to have all of our money. We didn't have to have taxes. So let's go back to that situation where we make a lot of our money nationally with tariffs, and then we may not have to, we can lower the taxes and lower them even more. That was one claim. Then another claim was, this is going to offshore. This is going to bring industrialization back. Everybody has said over and over that the manufacturing that we have offshored is a national security issue, because if we ever get into a conflict with these countries, it can literally be cut off in a day and have devastating consequences on our economy. So it makes a lot of sense to let's bring that manufacturing back to the United States. And again, this is something that administrations has been trying to do for literally decades. And other than periodic small changes here and there hasn't been any. And listen, you're going to have to change the economic calculations. The reason why, like some of these small businesses have been offshoring their manufacturing to China, is because a small or medium business doesn't have the millions of dollars necessary to build a factory. They have to rely on somebody who's already got it over there in China. If it was just, in other places in Asia, that's where it works. So until you can change the economic dynamics and have the same capacity here at something close to the same rates, then you're not going to get that back. And it's unclear what the intention even is that says, hey, we're going to have these tariffs to make it, so costly that the companies find it less easier to do business here. There's a problem with that, though, that you can probably see pretty quick. Number one, it still takes a great deal of capital to build a factory. You have to have skilled workforce. You have to have enough people and enough inputs, the raw materials, et cetera. You have to have all of those things to make it. That's a long-term, very expensive issue. And you have a small or medium-sized business, They don't have the millions of dollars, period. That's the reason they're doing it over there. So if you shut it off over there, it causes pain here. You're going to cause pain, but you're more likely to cause the company to go out of business. That's the more likely reaction, because cutting this off is one thing. Where are you going to find the money, the millions of dollars to put in their pocket in order to help them to build this up? Or maybe a consortium. Maybe they're going to, but even if the best case scenario did, you're talking years, plural, before that could actually materialize. And in the meantime, you've got these tariffs over here, according to the original plan now, that's going to make it so expensive that it's not cost effective for these small and medium-sized businesses to use that anymore, or even the large businesses, and bring it back here. But so there's this big delta of time. So you've got these tariffs over here, and then you've got these people who can't do the business they've done. And where are they supposed to find millions of dollars? At the same time, they're losing money from the lost business that they no longer have, because the tariffs make it impossible to do that with. You see where this could cause a lot of problem at the granular level where this is supposed to happen. But nevertheless, that was the claim. And so the other thing that they mentioned there was that they wanted to have a negotiation. This will be a forcing mechanism to get a better deal. But that's going to cause a problem too. That's incongruent with the overall claim of what this is supposed to accomplish even. And that's one of the bigger problems that I see from my analysis of how this whole thing is shaken out so far. It's unclear what the actual objective is, because the target seems to keep moving depending on what day we're talking about. And the logic stream is just kind of all over the map. And it's hard to see how they're all supposed to fit together to equal something beautiful for our country. And now then we're starting to see that. And then let's specifically look at the issue with China. So in the first round of tariffs announced on Liberation Day by the president, he had a 34% rate, a new rate on China, on top of whatever already existed. And so a day or two later, China came back and said, we're going to see that tit for tat, kind of like what Russia does. China has history of doing the same, tit for tat. You put 34% on us, we're going to put 34% on you. And then the Commerce Secretary, maybe it was a Commerce Secretary, Besant, said, okay, you know what? Don't retaliate. He actually said that when it said, he said, I'm just giving advice to everybody in the world. Don't retaliate. We'll figure this out. And he ended up saying, like, we're not sure about negotiations, but just don't retaliate, which kind of doesn't make sense, because you're telling everybody we're putting this huge financial imposition on all these countries, friend and foe alike, and that benefits us, and we're telling you don't retaliate. But that is what they did. That's exactly what they said that they would do. But then China did retaliate. So now then the United States follows it up, and now it's 105%. And then China says they come back and didn't quite go tit for tat. That they came back and said, okay, now from 34, we're going to go to 84%. And then the United States didn't like that, so they came back with an additional tariff, which brought the total up to 145% on China. I think it was just yesterday. And then this morning, China announces, okay, we're going up to now 125%. And interestingly, China has said this is as high as we're going to go. If the United States wants to ramp up to 10,000%, whatever, it doesn't matter. We're not going to change ours. This is the maximum right here. And from what I understand from talking to some financial experts, that's because the margins on Chinese businesses to be able to make money, it's already topped out, even beneath 125. So it's pointless to go higher, because now then they can't do business. So there's no point in even going up with the numbers, because they don't matter after that. But that of course, was incredulous. Some of the American leaders, they said, we told you guys not to retaliate. And now then you did. And so now then after saying just one day before, we're not going to put a pause on this stuff, the U.S. said, and we're not going to negotiate. Remember, the whole point was to have a forcing mechanism to either get a lot of revenue for the United States, billions of dollars a day, President Trump said at one point, or we're going to put pain on our own people to say, all right, now then you have to bring manufacturing back to the United States. And then a day later, we said, all right, we're going to pause them and drop everything down to 10%, except on China, of course. So China continues to strike back every time that we, have some of an escalation. They keep striking back there, and so now they've reached the top here. Meanwhile, we're trying to figure out, now hang on, if the whole purpose was to force manufacturing back to the United States, or to make tariff money, you've now taken them all back off, minus China. How's that going to work out? Because Now then you've taken away the motivation for the businesses to remanufacture this, and you've taken away the revenue. So they're not going to have it. And so you're renegotiating with all these countries, allegedly up to 75 of them. But as I've said in a previous episode here, that's not a monolithic number. It's not one entity. It's 75 different entities, and they all have their own national interest in mind, and they're all going to try to get the best deal they can, and they're all going to try to extract as much benefit as they can for themselves and to give as little as possible. So it's going to be a very painstaking issue, and we don't know if it's going to come out to our benefit. The European Union, for example, they had a 25% tariff on a number of categories and 10% on others on top of whatever may have already existed. And now then they're saying, okay, well, we've put a pause on ours as well. Well, you still got to go back and negotiate. So if our negotiations with the European Union don't work out to their advantage or their satisfaction, they may put it right back on. So you see, these celebrations are coming way too early because all the hard work is yet to happen. So far, all we did was say we were going to tariff and then say we're going to put it on pause. But none of the problems that were addressed and that were claimed that was going to be solved by this have been addressed at all, except that we now have just because we lowered everything to 10%, you have this big now elephant in the room of the China issue. And it is such a big issue because it is so much of the trade. It is America's number 3 trading partner. And I forget what number it is for China. It's not as big for China, but it's still fairly sizable. This has to be solved because this has global economic ramifications based on how it turns out. And it's got big implications for American business and American consumers. And President Trump came out today earlier and said, listen, this is, there's going to be a near-term pain on this, but the long-term gain. So it all appears that right now, it appears there's going to be the near-term pain, but it's unclear at all whether there's going to be a mechanism to get to the longer-term gain. And let's take a little look at it here because President Trump and some of his senior advisors are basically saying, hey, we're just sitting back waiting for China to call. When the pain gets enough, they'll come and give us a call. But from the Chinese side, there's Xi Jinping seems to not be interested in picking up his phone.
We are hearing from Chinese President Xi Jinping, really the first time since this whole trade war escalated to such a high level. The big headline is that he is saying China is not afraid. These are remarks that were made with the Spanish Prime Minister here in Beijing. And according to state media, he said that China is going to continue to remain confident. It's going to remain focused, saying there are no real winners in the trade war. Kate, the language that we're hearing from Xi Jinping is very consistent with what we've heard from other government officials over the last few days. And as you mentioned, as far as the possibility of a phone call between Xi Jinping and President Trump, not in the near future.
See, that's a little bit disconcerting that you have the Chinese side expressly saying nobody wins in a trade war. They're not saying they're going to win. They're saying nobody's going to win in a trade war. They're not going to win, and the U.S. isn't going to win. But on the U.S. side, we think that we are going to win. We think that we're going to win and they're going to lose. We're looking at a win-lose deal. We're not even entertaining the possibility of a win-win situation. And if we don't get to that, then it's hard for me to see how that this is going to work out here, because we're gambling that the pain on the Chinese economy, and it will have an impact on the Chinese economy. They're right. There is going to be pain both at the consumer and business level in China as well. So the same two issues that affect our economy and country are going to be affecting the Chinese economy and country. Questions are going to be which pain is going to be worse and who's going to be able to absorb it the first. A couple of important points. The depending on which service you want to look at, the percentage of U.S. trade with China is about as low as maybe 13.5% and as high as maybe 16.5%. It depends on a lot of the things they calculate, but that's approximately what it is. Meanwhile, for China, their trade with us represents about 6.5%. So somewhere between 1/2 and 1/3. So if you're looking at the effect on the overall economy, there's a bigger percentage of a trade war with China that's going to negatively affect our medium and small business as well as consumers as it is in China. So that alone makes it like, who can struggle the longest and be the best, be the okayest with it? I'm thinking it's not going to be our side that's going to be okay with that. We'll see how long this lasts. We'll see who, cries uncle first or who's willing to give in. But then you look at some of the other issues there, and some of our allies, especially in Europe, are concerned that how exactly is America making policy? They're worried about what this means for even transatlantic relationships.
I mean, the trouble is that you never quite know what's coming out of Washington. It's like, I just learned a new word, which is remuda, which is a bunch of wild horses where the rider decides which one to ride. And that's rather like the policies in Washington. There's a whole bunch of policies swirling around, and Trump decides, I'll ride that one today. I'll take this tariff thing and I'll ride out and see who I can challenge on it. And you don't know whether he'll tired of that stallion and will pick a new one the next day and have another policy. And China just has to, China is not going to be pushed by any lively horse prancing towards it. It will put up a fight.
Well, he's not exactly wrong, is he? I mean, just look at this one issue here. You had the administration first saying it's going to be Liberation Day, and we're going to put all these tariffs on because we're going to make a lot of money for the country. We're going to force manufacturing back into the United States. It'll be some near-term pain, but then long-term gain. Then all of a sudden, even before that, we say there's not going to be any negotiations. There's not going to be any pauses. These tariffs are just on there, and you got to figure it out. And then all of a sudden, the next day, it's exactly the opposite. Now, all right, there will be negotiations and there will be a pause, at least a significant pause on most all of them. And so now that what do you believe? Which words do you trust as being right that you act on? That if the country's leadership says this, that they mean it, and that you can take action based on it, as opposed to that's what they said today, but what are they going to say tomorrow? This is a bigger problem than I think people recognize. It's not just about what China and Russia, North Korea, Iran, Argentina, or some of these other countries that we may not like. It matters what you say, even to your enemies, but also to your friends, and especially to your allies. It's like if they can't trust you, if they don't know that the words you say are going to mean anything, then they're going to be much less likely to want to work in your favor. They're going to be less likely to put forth any risk to themselves if they're not sure if the rug's going to get pulled out of them within 24 hours. And we've been seeing a lot of that stuff happening right now. And as I pointed out, the thing has been paused, the negotiations are happening, but all the hard work is yet to come. And that includes with the European Union here. And one of the other analysts, Baroness Fox, who's actually, I believe she's a current member of the British Parliament, also worries that this may have a negative impact even from what the U.S. expects on China.
One of the things that is peculiar about the beautiful deal that Trump says he's done is that if he'd have actually initially just made this tariff war aimed at opposing China, then it actually might have impressed the rest of the world. Because he actually made everybody in the world a victim of the tariff wars, he's actually, ironically, managed to make China an attractive proposition. Who could imagine a situation where China is able to boast that it's going to lead the world in free trade? Who knew that was going to happen? And also where you have America as leading a huge amount of instability in the world, China, precisely because it's an authoritarian regime where small matters like democracy don't count, can offer stability.
Yeah, who would have thought that? Listen, that's another situation where she's not wrong here, because the United States is doing things that are causing chaos all over the place. I mean, obviously, even the previous administration, forget about the current one, the previous administration kept this whole situation with the Russia-Ukraine war fed and on life support, refusing to take any of the negotiated off-ramps, keeping the war going, making literally no effort whatsoever to end it, only to facilitate its continuation, regardless of how many Ukrainian people died. Then, of course, in the Middle East, you had the United States given a blank check to the nation of Israel, and it's war against Hamas, it's war against Hezbollah, it's war against the Houthis. We even participated in all three rounds of that, not just the ammunition, the weapons, and the diplomatic support, etc. Now then, when Trump comes in, he's looking to go possibly even further and is making some really loud noises about maybe going to war with Iran in the Middle East. Of course, now the issue with the Chinese trade war going on, but even with our allies, this out of nowhere huge tariffs that got put on all of our friends and allies all across the world. As she pointed out there, nobody was left off the list. Everybody was having these pernicious tariffs that were put on top of them that were seeking a win-lose outcome. That causes people to think, wait a minute, who's stable here? Who's the one that's leading for the potential for security and the absence of chaos and the presence of stability? And right now, that's the Chinese side. Because, I mean, you don't see them stoking up war anywhere other than the potential for the Taiwan Straits, which has been in effect. They've been doing this since 1949, literally since 1949. But nowhere else in the world, I think the last time they had any conflict with anybody was 1979, if I'm not mistaken. But nothing in the near term future. They keep talking about they want to have this Belt and Road Initiative. They're trying to expand economic ties. Now then they've got the BRICS forum where they're trying to expand a different economic center that's basically a counterweight to the West, which before was kind of like it's like the rookie league over there. Well, now all of a sudden the rookie league is getting bigger and stronger and more stable. And so more people economically are going to start looking over there and going, that looks like a better, safer place to put my money and economic future than the chaos that I have over on this side. She's not wrong. Also, we're talking about how, we're going to play hardball with China. Well, listen, we thought we were playing hardball with Russia 3.5 years ago. We intended our outright policy was to weaken Russia and to harm their economy, to harm their military, to see them strategically defeated. And what did we result? We had all the intentions. We thought we had all the inputs. Turns out Russia got stronger. Their economy is stronger than all of Europe. Their military is now stronger than all of Europe combined. And you can add us into that, all of NATO and Europe. Their conventional military is stronger. Obviously, their nuclear capacity is parity with anything that we have. And, we could all destroy the world 7 times over or something to that effect. But the bottom line is that we wanted to have this strategic outcome and it blew up in our faces. We need to learn from history and be much more sober and wise about what we try to do and think this all the way through before we start taking actions that could also blow up over in Asia in our face here. If this one's blown up security-wise, this one could blow up economics-wise. And unfortunately, this one goes bad, we've got problems right here in our own home because of the issue with the economy. With the, now you're talking about potentially raising costs within the next number of months in the United States, causing problems with our own small businesses, medium-sized businesses, even large businesses for that matter. It's going to rise the cost up on doing across a whole range of things, not to mention issues like the rare earths, which is a small niche of this, but the Chinese have also put either tariffs or curbs, outright blocks on some of the things that we need to do a whole range of products that we have, even things that we may manufacture in the United States already. If we don't get the inputs that we need from China, that could also be a problem. You see that there are a lot of levers that we're not thinking through about what the other side of this equation can get done here. But when you talk to some of the senior administration officials, they don't seem concerned about any of those things. This is Scott Bessent, who on the 8th of April, a day before Trump paused these, again reiterated what the objective of the tariffs were.
If we put up a tariff wall, the ultimate goal would be to bring jobs back to the U.S., but in the meantime, we will be collecting substantial tariffs. As I've said, I believe on this show that if we're successful, tariffs would be a melting ice cube in a way, because you're taking in the revenues as the manufacturing facilities are built in the U.S., and there should be some level of symmetry between the taxes we begin taking in with the new industry from the payroll taxes as the tariffs decline.
Yeah, but see, the problem with that is that the very next day, this tariff wall from which he's talking about, we're going to be gaining all this revenue, went away. And now then we're going to start negotiations, which we had said we weren't going to do the day before. And so now then all of those things have yet to be worked out. We may not succeed in any of them. We may succeed some in a number of them, and we may succeed a lot in some of the others. But you see, it's going to be a lot of hard, painful, long work, and the outcome is going to probably be all over the map. Who knows where it's going to work out. So this so-called wall of revenue you have is not going to exist. But now then there's, especially however this has worked out, then probably it's going to result in there will be some tariffs of some level on the United States. Because if we were in word going to do reciprocal tariffs, it seems reasonable that whatever the negotiated number comes out to from the United States, at the other side of that negotiation, in each case, will also put some kind of tariffs back on us, which would raise costs, et cetera. So you see that this is a long way from going on. So it's not the big victory it's talking about. Okay, so the next day was the 9th of April, where Trump put the pause in the negotiations, all that kind of stuff. Well, that caused is huge improvement in the stock market. So before that, the market had been tanking ever since he made the original announcement of the Liberation Day. It had just been tanking all across the United States, all across different markets around the world, and I mean big gashes, huge down. And so that's why on the 10th he said, okay, it was getting a little yippy. You may remember that that soundbite he had that. And then all of a sudden he says, we'll take it off. And then the number goes right back up. So people ask him, okay, since you had been saying there was not going to be any negotiations, there wasn't going to be any pauses, but the market was tanking fast and hard, is that what caused you to go back and put the pause on them? And Lutnick, the Treasury Secretary, the Commerce Secretary, says, no, that's not the reason.
Donald Trump is in charge of these policies in this direction. He is the greatest negotiator and the greatest person who understands these are his goals and his objectives, and he is executing them. And he did not bend. But what happened is the scale of those countries who want to come and negotiate with us is so great that it's the incredible respect and kindness of the president that says, I want to treat these countries with great respect, and I'm going to. So let's put a pause on, and then let's negotiate with them. But you saw also how he dealt with China. So he wasn't worried about the market per se. What he's worried about is that China is retaliating and has no interest of treating America fairly.
Well, no, China doesn't have an interest in treating America fairly. China has an interest in its national interest, like we have an interest in our national interest. And what we're looking right now is not to treat any other nation fairly. We're interested in getting a win-lose outcome. That's the fact. And when you see Lutnick there talking about, we were just looking to negotiate, et cetera. You had just told us there weren't going to be any negotiations. That wasn't part of the deal. That's like literally throwing a dart at the wall and then walking over and drawing a bullseye around it and saying, yeah, I hit exactly where I was aiming. No, you said the opposite. So you can't come back now and say, yes, that was the target. Now, here's the problem with that, aside from just semantics. It kind of leads back into what I guess Baroness Fox was saying is a concern, because people are saying, what are we dealing with here? What can we count on with the U.S.? What is your plan? Do you still have one to this day? What are the objectives? Because, man, whether we're talking about trying to negotiate an end to the Russia-Ukraine war, trying to figure out how to avoid war with Iran, how to negotiate all of these now 75 different situations between the United States and all these other countries, and not the least of which is the one with China, what is your actual objective? What is the thing you're trying to accomplish with all of them? And if people don't know what you're trying to achieve, then it's hard for them to make any decisions at all, especially anything that might benefit you, because the terms could change on any day. The objectives could change from one day to the next. And they may be making progress towards objectives A, B, and C, thinking that's what you're trying to do. And all of a sudden they wake up and now it's D, E, and F. And so everything could be turned upside down. And that just weakens people's willingness to trust the United States. And without confidence and trust that the United States says something and means it, and you can take it to the bank, then we're going to find that the support is going to erode even from our allies, and the opposition to us from our challengers and adversaries is going to harden, all of which are negative for the United States. So this is much bigger than just an economic issue that's going on right now, but something that we need to get a real handle on real quick, or the consequences could be really bad. And Professor Jeffrey Sachs, who has been on our show a number of times, is looking at this from a financial perspective, and he's even more worried than I am.
The U.S. has a bad habit of wrecking the world economy. It did it in 1930 with tariff increases, the infamous Smoot-Hawley tariffs, which were one of the major provocations that led to the worldwide Great Depression of the 1930s. It did it in 2008 by blundering in its forced bankruptcy of Lehman Brothers on September 14th, 2008, and that put the world into a tailspin, the Great Recession. Now it's doing it a third time. This is out of the fervid imagination of one person. This is not U.S. policy. This is not congressional policy. This is not U.S. public policy. This is Donald Trump's policy. He is single-handedly wrecking the world economy. And I think the damage is going to be done before it gets undone.
And we'll have to wait and see how that works out just on the financial level. But listen, he didn't say anything specifically about it in that soundbite right there. But he's also concerned about the whole BRICS issue, because what started off as a kind of a marginal economic forum that kind of languished for many years, actually, now all of a sudden is taking on more prominence. And more countries are thinking about coming in. We've already had members of NATO thinking about going in. Turkey has said that they want to sign right now. China is actively courting others. And listen to me, it's don't just say, well, because they're in Europe, they're going to stay in the G7 and they're going to stay in that orbit no matter what. That's not a given, because especially if things keep going, if this doesn't unwind in a way that can be beneficial to our allies, you're going to be providing even more ammunition and more motivation for more countries to drift from our orbit into the BRICS orbit. Because ultimately, a country is going to go where it feels like it can be the safest and have the most economic stability. And if you don't provide that for them, and if in fact instead you provide instability and uncertainty, that makes people really jittery and really nervous. And listen, the only reason we've been able to ride out, especially the 2008 economic recession that we had, the severe one, and several other things, has been because of the power of the U.S. dollar, because it was viewed as the safest place to put money. So that's why it's the international currency, the fiat currency, even though it's not backed in gold, hasn't been since 1971. But because of the stability, the view, the impression of America as being the strong, stable force in the world, we can get by with it. So we can do quantitative easing, we can print money, as others call it, et cetera, that you can get out of some of these things. If that starts to weaken, and not even if the dollar is replaced, but if it starts to weaken to a certain level, your margin, your ability to actually draw your way out of some of these and print your way out of these situations when the next one comes, and they inevitably will, goes down. And the day that you get to the point to where you run out of leverage, and now then the problems mount and you can't offset them, because then you may send up interest rates, you may send up inflation, et cetera, then you're going to be in a world of hurt. And then that's just going to have a cascading effect, because that's going to make us look less and less weak, or less and less strong, and make others look more and more attractive. And we don't want to get into that point. We don't need to get down to that point. That doesn't ever need to happen. The BRICS can exist on its own. It doesn't have to be an existential threat to the Western way of world, to the U.S. dominated way of world, to the economic strength that we have had for many, many decades. But it's not sacrosanct. It's not a permanent deal. It's not any kind that's owed to us. It's not that it's our birthright. It's none of those things. It has to be maintained, and it has to constantly be earned. And you earn that by being a trustworthy partner. You earn that by looking for win-win outcomes. You earn that by being fair. You can be hard, but you have to be fair. You have to play by the same set of rules that you're demanding other people play by. If you do those things, then your prosperity can extend indefinitely into the future. But if you don't, and if you get into a situation where it's a win-lose, and I'll play by whatever rules I feel like playing by today, then we will one day wake up to a world where we are no longer this sacrosanct center of gravity for the Western way of life, and by default leading the rest of the world. We may find ourselves on the outside looking in. And once that happens, folks, it will never come back. I'll just categorically say that. If we fall out, it's nearly certain that we will never be able to regain that position here, because the contours and the flow of life and of time and of history and of other forces in the world will overtake it, and you almost certainly will never get back to that point again. Let's don't find out. Let's keep what we got going, because everyone benefits. Everyone benefits in the world when we keep our word, when we have a single standard that's fair and equitable across the board. We can get back to that again before it's too late. But if we don't, then that's we're going to have to deal with some difficult decisions back then, because our leverage and our ability to flex will go way down. Doesn't need to be that way, and I hope it doesn't. That's one of the reasons we do shows like this, to point out what's going on, to sober up some people so they say, hey, it may seem cool to go down this path where you do what you want to do, but there are costs to that, and we need to make sure that we don't pay them. So share this with anybody that you know that wants to know what the truth is and how to avoid some of these problems, because we're providing solutions, not just throwing rocks. That's what this channel is all about. We're going to continue to do it. Thanks very much. We appreciate you. Be sure and like and subscribe if you haven't done so on the way out, and we'll look forward to seeing you tomorrow on Daniel Davis Deep Dive.